Well, the biggest challenge for the investment functions is to navigate capital markets that are highly priced, that are bearing quite some risk in terms of valuation of assets, and that are slowly coming back to a more depth-driven development as well. So navigating through this is the big challenge for, I would think, for the next years. It is made even more difficult by the fact that monetary policy is in a stage of change in a way. The US Fed has already moved out of extremely monetary expansion, and the ECB is going to follow, not very soon, but it will follow, and calculating how these big changes in the trend of monetary policy will affect capital markets, will affect the valuation of stocks, of corporate bonds, of course government bonds, which are highly priced, sometimes overpriced. This is going to be a huge challenge for CIOs going forward. Well, I appreciate the question because I think it is pivotal for CIOs to take into account these socioeconomic factors, these trend factors that change the environment that our economies are operating in. There are many, many examples that would show that demographic changes or migration really affect the fate of the economies, the growth and the prosperity of economies, and therefore also affect the returns of the assets that you can purchase in these economies. And this is very, very important going forward. We have seen in Germany, for example, a strong push of growth through migration in recent years, which helped to push ahead consumption, growth in the overall economy, and also generated a very good performance of stocks and other assets. So this is one example. And other examples would be that inequality, which you mentioned, can be quite negative, can have an impairment of the situation, can lead to an impairment of the situation because it does create disappointment, unrest in a certain way, and thereby leads to political surprises that can affect the economies in the long term. So all of the factors you've mentioned are very, very important long-term factors, and we have to put our heads together to try to see how they will play out. I think it is good to look at it as a risk. It is one of the risks that we have to have on our radar screen, that inflation could maybe surprise on the upside in the coming years, given the enormous amount of liquidity that has been pumped into the system, super low interest rates, expansionary fiscal policies in some areas, and so on. But I think it is actually a risk. It is not the baseline scenario. I think we are somewhat protected by too strong inflation, by the very competitive state of global markets. The globalization has put a pressure on inflation and on prices. And in the last years, we've also seen digitalization increase price transparency, increase competition. So I think these forces are quite strong, and they will prevent an upsoar of inflation. So I'm quite confident that we will have a gradual increase in price levels, which is not negative, which will help to alleviate a little bit the high debt burdens that many economies have piled up. So a little bit inflation is good. Too much would be a big, big risk for insurance, a very big risk for the demand for our life products, but also a risk for the profitability of P&C insurance. So we want to prevent that, and it's a big risk, and it's good that CIOs and CFOs are looking at it, but I don't think it's our baseline scenario.